Eric Muathe with Muathe.com with what I believe is the last installment in this series of how to time stocks on a daily chart, weekly or monthly chart if you missed any of the time frames. So let's take a look at three stocks. We begin by taking a look at CORT, and this was a question raised, I think, on stock tweets as to how the timing of this can be calculated. So we can see here that this is the weekly. That's the weekly. Before I do that, let's take a look at the monthly. Remember, all we are trying to do is try and see whether we can find an entry into a stock that has already moved. So that's the key. The stock has already moved. The question now is, how do you time this? We can see here that since the breakout on the monthly, there hasn't been any rest on the monthly chart. So we cannot use this for an entry. Hope that makes sense. By this deep into the series, this should make sense. If we go to the 2-year weekly chart, we can see we don't see 2 weeks of rest. In fact, why don't I take a look at the 1-year weekly, so we can see this from a closer range. And we can see here that there was a close there on the weekly time frame, and then we've only had 1 week of rest right there. So we cannot use the weekly for an entry right now because we haven't seen any recent minimum of 2 weeks of rest. So we cannot use the weekly chart on this one. So let's go take a look at the daily. And on the daily, this is how it looks on the daily. By the way, let me just explain this. We can see here that on the weekly, very strong RSI action, showing very strong demand, showing intention is still there in the stock. Of course, yes, the stock is at lofty prices, but if you're trying to play momentum, these are the type of things you want to be looking at. We also can see that on the monthly, we have very strong RSI action, as the RSI is now moving above 69.1 for the first time in at least more than 3 years. So this is already a 3-year high breakout, RSI moving above 69.1 for the first time. These are the type of things you look for in terms of momentum. So let's go to the daily. And the daily, you can see that there's a recent pullback of recent highs. What I'm going to do here on the daily before I do is take note of the fact that the RSI is holding above 69.10. So the stock continues to be strong. And I want to take a look at the 6 months daily. So let's go to 6 months. So bear with me. Oh, maybe I did not do that right. Give me a second. Okay, so on the 6 months daily now, we can see this a little bit clearly. Now, a couple of things is, number one, there was a recent rest period here. Even though there's no entry on the weekly, we can see on this chart that there was a couple of rest days here, and that was for more than 2 days of rest. So the breakout subsequently gave an entry there that eventually, after some trial and error, was successful. But we are trying to find the most recent potential entry if you want to own this for, let's say, for a swing trade lasting a couple of days, a couple of weeks. Is we need to take a look at the recent daily closing high, and that would be the next buy point. So the current daily closing high on this stock is 6.47, and you can see here that we've had at least more than 2 days of rest. We are now on day number 3 of a rest period. Hope you can see that. So here we are on day number 3 after closing right there. So any breakout above 6.47 is legit because we've had at least 2 weeks of rest or 2 days of rest. So that meets the minimum requirement. Any breakout short term should be bought. Otherwise, don't buy the stock, because remember, the stock is elevated and you only buy the potential breakout suggesting there could be more upside. Otherwise, it's a risky trade. This stock was trading at $3. Now it's at $6.50. So in about 2 months, it's up 100%. So you have to be careful with these types of things. They can easily correct 20-30% and still be okay. But if you want to play the breakout game, if you want to play momentum, insist on at least 2 days of rest for this one, and maybe you can go along with a move above 6.47. The other stock I wanted to discuss is QTM, and it gives us an interesting look into stocks and how we can use this. First, this is the weekly chart. Let's go to the monthly. And on the monthly, we are looking at a stock here that is just now about to move to fresh 3-year highs on the monthly. The buy point is right here, or was at 176 and 176, so 176 1.76 was right there, and it is now above that. In fact, you can even use the monthly breakout right now of 1.76 as your entry. Yes, it's slightly extended above 1.76, but you can still use the monthly, because if there's more upside, this is where you want to go long. We are looking at the possibility of the RSI on the monthly moving to 3-year highs, and if we take a look at the MACDs, we can see that at least one of our MACDs is close to breaking out to fresh 3-year highs, and the main MACD is not far behind here. So this one meets the minimum requirements, and even on the monthly, the timing is good. Okay, hope that makes sense. Now, if we go to the weekly, remember we are trying to drill down on how to own these things. On the weekly, we can see that this was the prior weekly closing high, and that price point is at 1.81. So with the stock trading at 1.84, even the weekly is giving you a nice opportunity to hold the stock and see whether it can move higher. Now, the one thing I can see here is if the stock breaks back below 181, or if it breaks below 1.76, which is the previous monthly closing high, then you can get out of the position, because it means that momentum has run out. The one thing I have to note here, just a side note, is visually the stock does not look very stable, and this is important. You can see visually we have this very volatile type of jerky, unstable, moody type of development. It moves up, down, up, and so you can see that this is not what you want. Honestly, you want a stock with a little bit of a more stable price action. So this one, even though it's breaking out, I would not want to put a lot of emphasis or a big position because of the instability. But since we are not using, or we are not trying to buy this stock, honestly, we're just trying to study how to look at charts. The thing here to watch is the weekly on a timing perspective is above the recent weekly closing high, so, and it is within that buy point range. And a good buy point range, as we've discussed previously, is at least 5% above the ideal entry point. Is a nice range. So if you can buy it within 5% of 1.81 on the weekly, that's a good range to at least go long an instrument. So that's the 5% sweet spot. So the weekly is giving you an opportunity. If we take a look at the daily, and this is interesting, is we can see that the daily did break out here. There's a daily breakout there, and the price, I believe, there is at about 1.81 also, which is this highest daily close prior to the recent move. The stock has held above that since then. The question that was raised to me is that if this is a day number 4 potential breakout. And what is interesting here is if we take a look at the 6-month view, so you can see this is now the 6-month daily view, is what's interesting is the stock closed here at 1.84, which is 1 day of rest here, and then on the next day it was down. on day number 3 it closed again at 1.84. So the question is that 2 days of rest? And the answer is yes. So let me explain this. So we closed here as an example. So that was day number 1. We closed at, let's call it 1.84. Day number 2, we closed down. So let's just take a number here. Let's say we closed at 1.82. Day number 3, we close exactly at the same level again. Let's do it a little bit different. We close here, and so that, see whether I can do that correctly. So there we close again, interestingly enough, and it's important to understand this, we close again at 1.84. So the question is this the minimum 2 days of rest? And the answer, like I said, was yes. Why? Because it has not closed above 1.84. And so anything at 1.84 or below suggests that this is 2 days of rest. So this situation, because this is now the 4th day after this high here, any breakout now above 1.84 has given you the minimum 2 weeks of rest. So it's an interesting situation here where we see that you get 2 days of rest, but yet one of the days is back to the previous high, which is a good explanation that we just need the stock to stay 2 days down or not go above the prior daily closing high. What I'm going to do here is probably, and I think this is probably a first, I'm going to go to 0 months and we're going to look at this from let's take a look at, let's call it just 10 days. 10 days daily. I believe I've never done this before. Yes, because it's, but I want to emphasize that again because it's a very interesting point to make here in terms of calculating the days. You see this close here recently. This is the day I was saying was 184. And then we close here day number 2. So that is day number 2. This was day number 1. Day number 3, this day it closed again at 184. So that is also 2 days of rest. That's what I'm getting at. And so any breakout above 184, including today or in the future, is going to have at least fulfilled the 2 days of rest period minimum requirement after making a short-term high. So that's, I like this idea, this example, because it shows that the principle is it needs to stay below this daily closing high for at least 2 days. After 2 days, if it stays for 20 million years or 2 weeks, whatever, then it is a fresh breakout, not a continuation rally. All right, we're going to take a look at one more. And here's a stock that just blasted out of nowhere, was trading under $1, about 80 cents, 70 cents at the end of March, and in about 3 weeks or so, it's at $9. That is amazing. Take a look at the sharp angle of penetration as it jumped above 50. So there is a critical move above 50. Take a look at the sharp angle of penetration, which I call the Muathe angle of penetration, or the MAP, as it moves above 69.10. Okay, so the sharp angle of penetration just tells you that the stock has velocity and it has a sharp intention of moving higher. If we take a look at the monthly, couple of things to observe here is the minimum requirements for a breakout is a stock moving to 3-year highs on the monthly, bang. All right, minimum requirement met on the RSI, and of course on the MACDs we see that even one of the MACDs was breaking out to 3-year highs right now, bang. and also moving above zero for the first time in many years. So the MACDs met the minimum requirement, which is something you're always going to see before a stock starts moving with such velocity. As of right now, and we've just been trading for 15 days this month alone, month of April 2015, halfway through the month, the stock is up 771%. I guarantee you this is not normal. Okay, so we can see here that on the monthly, from a timing perspective, there is no 1 month of rest, which is the minimum requirement. No 1 month of rest. So we have to go and investigate the weekly chart if we want to be part of this trade. So we go to the weekly next, and on the weekly we can see that over the last 4 weeks or so, the stock has had no rest period. So we cannot use the weekly for an entry for a fresh move. This is a continuation of the move from here. No rest, no rest, no rest on the weekly. If we go to the daily, and this is a 1 year daily, we can see as of right now, the last couple of days, the stock has given us no rest period. So it would be stupid, well, I guess it would not be intelligent of us try to time this thing here. It's a very risky trade. You want the stock to rest before the next move. Maybe you can have a chance of getting 10, 20, 30%, maybe. So we haven't seen any rest on a daily chart that spans at least 2 days. So you cannot go long on this one based on the breakout principle. But I want to explain to you why this is important to always wait for the 2 days of rest. You can see also, I'll need to point out here, sharp angle of penetration as the stock jumped above 69.10. So that sharper angle of penetration is what identifies strong move, and the stock was showing the potential, because if you go back to the 1 year daily, you can see another sharp angle of penetration here, another sharp angle of penetration there, and that angle of penetration is similar to this one. The angle of penetration is identical. They are almost the same looking shape and form. That's why sometimes after you've looked at that Muathe angle of penetration educational video, you will see that this type of action was already being demonstrated by the stock. And so this move here, you can see the angle of penetration, they are all the same. This is why I think that it is important to always have an idea of what type of stock you are trading. You want to find stocks that generally, when they start moving, tend to have sharp angles of penetration. So take a look at that map, which is the Muathe angle of penetration, for more into this. So this is the 1 year daily. Let's take a look at the 6 months daily so we can zoom in. Let's zoom in here. And so this is the 6 months daily, and you can see that we closed here and had at least 2 days of rest before the subsequent successful breakout of about entry there of about $4.50. In fact, let's take a look at this is now 6 months. Let's go and take a look at 3 months worth of data so we can narrow down even further. And this is good because it gives us an explanation. So this is 3 months worth of data on the daily, and we want to look at this area here. We closed there after a spike, very nice spike from about 70 cents, 80 cents, all the way to $4.50. That was a very big move. So if you had seen this move, I'm saying if you had seen this move, sometimes we don't see these moves until it's late, but if you had seen this move, then you would have been sensitive and you would have watched for the stock to hold at least 2 days of rest, and then you buy the next day number 4 breakout. The one thing I would encourage you is to always take a look at the top performing stocks every day, top percentage gainers every day. If you make this a routine that every day you at least scan and know which stocks are showing the biggest gainers for the day, every day. It's a ritual that I have to do every day. You have to go and find, there's so many websites, so many tools that can give you the best performing sectors for the day or best performing stocks for the day. This way you can know which instruments are moving, because this is where you find these types of action. By scanning the daily gainers, you start getting a sense of which stocks to at least have on your scan and on your watch list. So anyway, this is 3 months of daily data. What I want to do now is let's take a look at the last 2 months, because I want to narrow it and come to focus so we can look at this point. So we have the initial signal that the stock is changing. We have this jump from 70 cents, 80 cents, all the way to here. All right, so that should have alerted anybody. In fact, multiple strong days. This was a strong day here. The stock was probably up 300-400% on this day, and even on this day it was probably up about another 90%, 100% gain. So what you do is you don't just say, oh, this stock is too strong, I'll never own this. Your job and our job is to, once you see it have one down day, which is here, after this one down day, now you have a chance of maybe having 2 days of rest, which we exactly get here. Even though it was a positive day, it was below this daily closing high. So right there, once the stock jumps above 450, which is now suggesting a fresh breakout after 2 days of rest, your job is to go long here at about 450, 460. And if you are lucky, and how do you know the stock has momentum? Number one, sharp angle of penetration. Number two, it is breaking out on this day, breaking out when the RSI is already above 69.10. So you know the stock has massive momentum, massive momentum. And if you are lucky to have bought the breakout after 2 days of rest, the stock has since moved from 450 all the way to $9. So there is your 100% gainer in 1, 2, 3, 4, 5 days. Eric Muathe with Muathe.com. Good luck, peace, and blessings. Woo! EACS.